we're looking at Bitcoin right now, and I'm pretty sure it hasn't gone unnoticed that I've been rather bearish for a while. And as some of you probably know, I started de-risking when Bitcoin got rejected up here by the daily 20 and 50 EMA. Now, I'm not going to tell, I'm not going to try to, I'm not going to say that I predicted this drop or predicted the top or anything like that. It's just purely a matter of some capital preservation, risk management, and luck, basically. So, I mean, the fact that I sold here and de-risked it here was just the fact that we really had trouble getting above the daily 20 and 50 EMA, and we retested that area for the third time, and I really did think that the second retest of the weekly 20 EMA or the 100 simple moving average, which is down here, the second retest of that area just has a much lower probability of actually bouncing. So I thought, you know what? I'll de-risk, I'll exit, and wait for some proper strength to come in. And what we're seeing right now is the first sign of a bottom, right? Well, obviously, because we're hitting support, we're bouncing. You look at the S&P 500. It's obviously looking very good right here, and I'm watching the S&P 500 and US 30, and what I want to see here is, because obviously they're a bit correlated, right? Like if we are in if we enter a risk-off environment, you're going to see the US equities start dropping and falling, and you look at S&P 500, the uptrend is very much intact, but as soon as you kind of drop below the daily 50 EMA or even the 100 simple moving average on the daily, you will see that there's a real possibility of an end of the trend, because the behavior here is, huge dips come down to the 100 simple on a daily. You will see that we tested that one right here, this area right here, and then of course the this one right here, and of course here. So the idea of it's very important to remember here that being cautious and careful is not the same as being bearish, because if you look at this trend right here, it's still very much bullish. And if you look at Bitcoin, and like I've said so many times, if we do form a bottom down here in the long RLC and then start reclaiming the weekly 20 EMA and ultimately start reclaiming the daily 20 and 50 EMA, the chart, if you actually remove that wick, if you just ignore that wick, which you can do, because when Bitcoin dumps heavily and you get that liquidation cascades and you have a strong wick, the important thing is what happens after that dump. Like what is price action giving you after that dump? And when price action kind of develops and gives a couple of daily candle closes, that's when you can start figuring out what's actually happening, right? And ignoring that wick right here, we see that price is, well, we don't even have to ignore that wick, but what we're seeing right now is some proper structure. This is on 12-hour, right? And we're seeing multiple 12-hour candles closing inside the reload zone right here. And this is usually where bottoms are formed. Now, we're not out of the woods, so to speak, yet. What I want to see here is for us to really reclaim this blue box right here. All right. If we do reclaim this area, I am fairly certain. Well, not fairly certain, but there's definitely a much higher probability of, and it sounds stupid because it's so obvious. If we reclaim lost support, obviously it's much more probable that we're going to continue higher. That's just pure logic, right? But looking at the technicals of this, we want to see some type of bullish break in market structure to really confirm that we are now entering a new bullish secondary trend within the overall bullish market structure. So the overall bullish market structure that I'm talking about on the daily is this, right? That's the overall bullish market structure with a low, higher low, higher low, a high, and a higher high, right? So that's the overall bullish market structure. And the secondary trends, or the smaller trends within that trend, is this. You have 1, 2, 3, and 4, right? So you have one big trend, and then within these trends, the moves that's going to create the lows and the highs. Between the lows and the highs, you have secondary trends, right? And the way I'm trading is I want to enter on those trends, right? I want to be long on the trends within the bigger trends, right? So I'm looking for confirmation that we're starting a new uptrend, right? And that new uptrend, if this daily trend is going to continue, I'm thinking would look something like this, right? And I would like to get in somewhere around this area if we have a bullish confirmation, a bullish break in market structure, and then exit with that where that trend kind of breaks down. So we need confirmation, right? We need confirmation. Looking at the 4-hour right here, we are starting to see what could potentially, like on 1 hour, we have a double bottom, right? So on 1 hour, we have a double bottom, which could turn into something like that, right? Where we kind of come down and we hit the neckline of the W, the resistance area right here, use that as support, and start trading higher. If we get that with a reclaim of the 20 EMA, the weekly 20 EMA, we have a 1 hour bullish market structure. But then looking at the 4 hour, we actually might still have a bearish market structure. But if we get something like this, right, a high, a low, a higher high, and a higher low. Now this right here is a 4-hour local bullish market structure, right? So when you have a 4-hour bullish market structure, a local bullish market structure with a bounce inside the reload zone, the RLC, and the reclaim of the 20 EMA. Now, for me, that is a fairly high probability that we have seen a bottom, right? But we're not there yet. We're not there yet. So I am not exposed to crypto. I own no crypto at this point. I've sold everything in this area, right? So for me to get back in the market, and I'm not a long-term investor or anything like that, so I don't hold crypto. It's not like I buy crypto and I'm gonna sell it in a couple of years. Like I don't really care about that. Like I look at trends. I want to ride the trends. If the trend is bullish, I'm in. If the secondary trend is bullish, I'm in. If we break the trend, I'm out. You know, and there's different stages we go through, right? There's different stages of confirmation, right? So here we have a chart that's where 4 stages of confirmation. And the first stage would be a rounded bottom inside the reload zone, right? And that is what we're getting right now. This could very well, be arguably be a rounded bottom, right? Well, it's like around the bottom doesn't have to be perfectly rounded. It's basically just you get around the bottom if you get something like this, right? Instead of just having a V bottom reversal. So most bottoms are going to look like around the bottom, right? And that's stage number 1, which we are printing right now. And then stage number 2 is a low time frame bullish market structure, and that is what I've talked about right here, where you want to see a local 4-hour bullish market structure, right? So that's stage number 2, and we're not there yet, right? We are potentially starting to form a 4-hour bullish market structure. That would be stage 2. Stage 3 would be a reclaim of the 20 EMA. So remember, round the bottom with the bullish market structure in 4-hour with a reclaim of the 20 EMA. That's stage 3. This is where I will seriously start thinking about adding exposure. Then stage 4 would be reclaiming the 50% fib, which is above the reload zone. And in a couple of days, that zone will probably be confluent with the daily 20 EMA and perhaps even getting the daily 50 EMA closer to that area. So if we can reclaim this level, when the daily 20 and 50 EMA is in this area, we have all 4 stages of confirmation, right? Because we would then have a 4-hour bullish market structure that will most likely translate over into a daily bullish market structure we have around the bottom inside the reload zone. And that would then mean that this daily trend, this trend right here, is very much intact, right? Very much intact. And I will then ride this trend up as far as possible, right? And my invalidation will be the same invalidation as always. It would be the daily 50 EMA. So reclaiming the daily 50 EMA, I want to be in. You enter here. You might want to be taking profits when you lose the 4-hour trend, which I believe got lost somewhere up here. And then you exit if you lose the daily 50 EMA. You get in on the daily 50 EMA once again. You ride that 4-hour trend up, which got invalidated here. And then you want to exit when you break the daily 50 EMA again. That's how I've played this bull market up until now, and that's probably how I'm gonna continue, trading the bull market if we're gonna see continuation. So that is a bullish. That's the bullish scenario, right?